Hello viewers, this is Vibhuti. Hope you are doing great. In this video, I will start with practical portions of accounting. For this, I will take some transactions and show you how to record the journal entries correctly. So let's start. This is a format of journal. First column is of date. We have to put the date on which the transaction has taken place, and then the second column is of particulars. We have to record the journal entries in the particular column. So let's start with our first transaction, that is commenced business with cash from rupees 3,50,000. So the journal entry for this transaction will be cash account debit to capital account. Then we have to put the amount, that is rupees 3,50,000 on the debit side, and then same amount on the credit side. Leave the column of LF as it is. Then we have to put the narration, that is being cash brought in by the owner as capital. After that, you have to draw a thin line to indicate that the entry of the transaction has completed. So our next transaction is purchased furniture for cash rupees 25,000, which has taken place on 4th of July. So we have to put the date, that is July 4th, and then we have to record the journal entry in the particulars column. The journal entry for this transaction is furniture account debit to cash account. Then we have to put the narration, that is being furniture purchased for cash. After that, we have to put the amount, that is rupees 25,000, again in credit amount column, that is 25,000. Then again we have to draw a thin line which indicate that this transaction is also completed. The next transaction is invoiced goods to Mr. Y worth rupees 2,000 and allowed a trade discount of 2%. As I have already explained in my previous video that we never record trade discount in the books of account. We only record cash discount in the books of account. So first we will calculate the net amount and we will record the journal entry with that net amount only. So let's calculate the net amount. Total sales is of rupees 2,000 and trade discount allowed to Mr. Y is of 2%. So first we will calculate trade discount. That is rupees 40. This is trade discount, and the net amount will be 2,000 minus rupees 40, which is 1960. Now we will record the journal entry with this net amount. The journal entry for this transaction will be, first we will put the date, that is 5th of July. Now the journal entry, that is Mr. Y account debit to sales account. After that we put the narration, that is being goods sold to Mr. Y at a trade discount of 2%. After that, we put the amount, that is the net amount which we have calculated, 1960 in the debit side column and the same in the credit side column, 1960. Then draw a line. Our next transaction is invested in shares of XYZ Limited and paid rupees 4,000. And this transaction has taken place on 6th of July. So we have to put the date, that is 6th, and the journal entry for this transaction will be investment account debit to cash account. So the amount will be rupees 4,000. Same in credit side column, 4,000. After that, we have to put the narration, that is being shares purchased in cash. Next transaction is repairs to scooter, payment not yet made of rupees 160. In this case, the payment has not yet done. So we have to record the amount which has not yet paid in the outstanding account, as repair is expense for the business. So repairs account will be debited and outstanding repairs account will be credited, because business has to pay that outstanding amount sooner or later. So the journal entry for this transaction will be repair account debit to outstanding repair account. After that, we have to put the narration, that is being scooter repaired. We have to put the date also, that is 6th of July, and then the amount, which is rupees 160. Then we have to draw a thin line. Now our transaction is completed. Let's move on to our next transaction, that is salary outstanding to clerk. Again, it is a outstanding amount which business has to pay in the future, and the salary amount is an expense for the business. So salary account will be debited and outstanding salary account will be credited. So the journal entry for this transaction will be, first we have to put the date, that is 7th of July. Then a journal entry, salary account debit to outstanding salary account, then the amount, which is rupees 3,000 on both the sides. Then the narration being salary not yet paid. Next transaction is depreciation on furniture of rupees 400. Depreciation is the gradual or permanent decrease in the value of an asset. The cause of depreciation can be anything. Depreciation is an expense for the business. So depreciation account will be debited, as depreciation is charged on furniture. So furniture account will be credited. The journal entry for this transaction will be, first we have to put the date, that is 7th of July, and the journal entry will be depreciation account debit to furniture account being depreciation charged on furniture. and the amount will be 400. Next transaction is Mr. A was declared insolvent and paid in full settlement rupees 550 and the balance was written off as a bad debt of rupees 250. As Mr. A became insolvent, so only rupees 550 is recovered from Mr. A and remaining rupees 250 is irrecoverable from Mr. A. So this irrecoverable amount recorded under the bad debts account. So bad debt account is a loss for the business. So bad debt account will be debited. Cash account will also be debited because business is receiving cash of rupees 550. So the journal entry for this transaction will be cash account debit, bad debts account debit to Mr. A's account. Then we have to put the amount, that is rupees 550 in front of cash account, 250 in front of bad debts account, and total rupees 800 in front of Mr. A's account, which means Mr. A has to pay rupees 800, but he is actually paying rupees 550 and the remaining amount is an irrecoverable amount. And after that we put the narration, that is being amount received from Mr. A in full settlement of his debts. Our next transaction is Mukherjee becomes insolvent, a dividend of 50 paise in a rupee is received. So actually business is receiving rupees 5,000. This line represents that business is receiving only half of the amount. So if we double the amount, that is 5,000 into 2, which comes 10,000. So business should receive rupees 10,000, but business is receiving only rupees 5,000. Remaining rupees 5,000 is bad debt for the business. So it is a loss. So the journal entry for this transaction will be cash account debit, bad debts account debit to Mukherjee's account. After that we put the narration, that is being cash received from Mukherjee in full settlement. After that we put the amount, that is rupees 5,000, again 5,000 and then 10,000. Next transaction is Mr. Q returns goods of rupees 400. So it means that business has sold goods to Mr. Q, but now Mr. Q is returning goods to the business. So the entry will be sales return account debit to Mr. Q's account. Amount will be rupees 400. Narration will be being goods returned by Mr. Q. When the goods was sold to Mr. Q, in that case sales account will be credited because goods were going out, but in this case goods are returned by Mr. Q. Sales account will not be debited, sales return account will be debited, which means goods are coming in. Next transaction is goods taken out by the proprietor for domestic use, that is rupees 800. Here proprietor is withdrawing goods for his or her personal use. In this case drawing account will be debited and purchases account will be credited. So the journal entry will be, first we will put the date, then drawing account debit to purchases account being goods taken by the proprietor for his or her personal use. Then we put the amount 800. Next transaction is interest on capital for the month of rupees 700. Here business is giving interest on capital to the owner. So interest on capital is an expense for the business. So interest on capital account will be debited and capital account will be credited because it is given on capital. So the journal entry will be interest on capital account debit to capital account being interest on capital paid to the owner. Then we have to put the amount, that is rupees 700. Next is rent for 2 years paid in advance of rupees 30,000. Rent is an expense for the business and business is paying rent in advance. So the amount of rent will be debited in the prepaid rent account and the journal entry will be prepaid rent account debit to cash account being rent paid in advance of rupees 30,000. So our last transaction is bank charges for the month of rupees 200. Here bank charges is an expense for the business, so and bank has applied the charges, so the journal entry for this transaction will be bank charges account debit to bank account being charges applied by the bank of rupees 200 on both the sides. So we are done for today. If you consider my video useful, then please do subscribe my channel and hit the bell button so that you will be notified whenever I upload my new video. Until then, goodbye, take care, thanks for watching.